And we're muted, but we caught it this time. Hey, y'all.
I knew it. I was just waiting for you to catch it.
Oh, okay.
I got you.
We stayed out late last night. Sorry.
I got you, baby. So anyway.
Yeah.
Do we file taxes? Did you file the taxes?
What taxes?
You do know when you leave the United States, you still have to file taxes, right?
We do? We do?
Well, it's a good thing we have an expert on this subject tonight, Katrina. She's a CPA. But before we get into it, we're going to introduce ourselves.
Hey, y'all. My name's Halisi.
You sure?
Yeah, I'm sure about that. My name's Halisi.
And I'm Rick. Welcome to our Black Utopia.
On our channel, we talk about money, which we're going to talk about tonight. We talk about travel and retiring abroad as we build generational wealth.
Yes.
So you've already told them who our special guest is today. But first, if you are new to our channel, then you may not know. About 6.5 years ago, Rick and I got a wake-up call when it comes to our money. We were getting close to retirement age. We looked at our bank accounts. They looked like, yeah, they look bad. Like, yeah, it was bad. It was bad. But about 3.5 years ago, we got our financial act together and we went from negative 22,000 in net worth to over 1 million. And if we can do it, baby, you can do it too. Yes, 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 yes.
Yep.
So without further ado, we are going to bring on someone who, if you are thinking about moving abroad, this is a person that you need to listen to. If you think it's even a hope in the future, you need to make sure, like, we talk about, the peace that you have when you leave the United States. We talk about not having to put on the armor as a Black American anymore when you leave the United States. Mm-hmm. But everything is not easy peasy. There are little details that you have to pay attention to make sure that you keep the peace in your life and stress-free.
And keep your uncle
right
across the pond happy.
Yeah, that's Uncle Sam.
Because he wants to know.
That's Uncle Sam.
He don't want to be left out.
Hey, Katrina, how are you?
Katrina.
Good to see you.
Good. How are you guys doing today?
We're good.
That uncle happy.
Because Uncle so-and-so in them.
Yeah, he ain't like the uncle that, comes out dancing and when everybody's out there and here comes Uncle, what's his name, pulling his pants. He ain't like that uncle. That uncle's cool.
No, that uncle's cool. This uncle will get on your nerves.
Yeah.
So why don't you we introduced you, but why don't you introduce yourself and then we'll say hello to some folks who are in the audience tonight.
Okay. Well, hello, everyone. Thank you for having me. My name is Katrina Haynes. I'm a CPA with over 20 years of experience, and I specialize in U.S. expatriate and foreign national taxation. So individual taxation for those taxpayers that have international tax issues. So I'm really excited to talk about this. I talk about this a lot, just giving people awareness as they move overseas as what those trailing requirements look like so you don't have any issues moving around the world.
Yes. And so, Rick and I were doing tongue-in-cheek early, in our intro. But let me tell you, that I know if you watch this, that we know that your butt's supposed to be filing taxes. Yeah. Uncle Sam does not care.
He don't.
Where you at unless you denounce citizenship, which costs
money.
No matter where you are, you've got to file and you may have to pay depending on where you are at. So, Mr. Victor, Action VJ, is in Portugal.
He's in Lisbon. He went to Pingo Notes.
Yes.
And I saw something on there that he was making. You like those hills, right, Action VJ? Are you liking those hills, buddy?
Can we talk about the hills?
We talk about it?
Yes. So the hills are real. If you have ever been to San Francisco, then you understand what we're talking about. And so we will see Action VJ at the meetup next week. Hey, Greta, good to see you. Christy G, I think we're going to see you next week as well. Vicky, good to see you. Good afternoon, y'all. Oh, yeah, I guess it is afternoon your guys' time. It is 8:35 at night. Hey, Peyton, good to see you in the chat. Auntie Trey, good to see you. Regina and Alexandria MD. Hey there. Hey there. Hey, Brenda. Good to see you. How are Worldview? Good to see you. 2 in a row. Yay. You like us again. I'm glad you have time, not just watching the reruns. Hey, Krishan.
Hey, Krishan.
Are you here or are you in Marrakesh? Where are you at, girl? Where are you at? So, I don't know if you know, Katrina, that there's a bunch of Black women in Marrakesh, Morocco right now.
Yes. And I think we've talked before.
Okay. And a few husbands. So you've talked to Krishan before from Blacks at Global?
I believe so.
I'm sure you have, because Krishan knows.
She knows everybody.
Everyone. Hey, KB, good to see you. Maria, hello. Hey, Kay. And Michelle. Tunisia, higher Black Utopia, and everyone. Hey there. Hey, Holly. Good to see you, Chris and Pam. Who else is in the audience? We've got Lisa. Hey, my piece. Good to see you.
Good to see you.
Roxanne. Okay, Artwork Insight. Good to see everyone. Hello. We're going to get right to it. We love you guys. We're so happy that you all are here. But let's get right to it, because this is tax season.
Yeah.
And I was telling Katrina, this is the first time that we've actually gotten all of our information to our accountant way ahead of time, just to find out that actually our deadline is still April 15th, I think, because we are not filing, like, we just moved here. So
it's where you are now. It's where you are as of the deadline.
So, all right. So that means I really had until June. Here I was like patting myself on the back and everything. But hey, it's the way it goes. So I guess let's just start with the basics. Like what you just said, okay, so we've got, there are folks who watch us who have just moved here. There are folks who watch us who are moving here in 2023, as well as, a couple of years out, and moving to other places as well. Of course, we got people moving to Mexico, some moving to the continent, some moving to South America and Central America. And I haven't heard of anyone moving to Asia so far.
No, not yet.
Some people said they wanted to visit, so that's cool.
Yeah, they want to look at it.
So basically, if you are an American citizen, what should you know?
You should know that you always have to file your tax return, even unless you fall underneath the filing threshold, which typically is your standard deduction. So if you have enough income, if your income is less than what your standard deduction is, you don't have a filing requirement. You have 3 years to claim any refunds. This is for everybody. You have 3 years to claim any refunds. The IRS has 7 years to audit you. If you're a U.S. taxpayer living overseas, then you have until June 15th to file your initial return or file your extension. Your extension would give you until October 15th regardless, so you don't get an additional 2 months. But if you're still out of the country at October 15th, you can file another extension. It's actually an extension letter, where you basically you send the IRS a letter and say, hey, I'm still out of the country. I need 2 more months. And they'll give you 2 more months until December 15th. Oh. And you don't get a late filing penalty, but if you have any tax, your tax is still due by June 15th, like it would have been due by April 15th, or you would have a late payment penalty. But you just have to file your return. I get people all the time that say, well, I didn't file because I was less, I made less than the foreign earned income exclusion, which that's if you're living and working outside of the United States and you're earning income less than an amount that's adjusted annually for inflation. For 2022, I believe it's $112,000. Then you're able to exclude that income just as long as you are working out of the country when it happens. So it doesn't matter if the income's reported to you on a W-2. It's about where you physically are working when you earn that money. It's not about who pays you or the bank account that it goes into. So that means if you are getting paid by a foreign employer, into a foreign bank account, but 50% of your time you're working in the US and 50% you're overseas, then only 50% of that income would qualify for the exclusion. You still have to file your return. Even if it's going to show that you don't owe any money, you still have to file the return because you have to, it's an election. So you're showing them every year, I'm making this election. There's also the foreign bank account reporting, and this gets more people than delinquent taxes ever will. In addition to reporting all of your income to your, on your Form 1040, you also have to disclose any foreign bank and financial accounts if the aggregate value, meaning the total value of all of those accounts, is $10,000 or more at any point in time during the year. So that means if you have two foreign bank accounts and you run $10,000 through both of them, you have to disclose every foreign bank or financial account. That is where the IRS, the Department of Treasury, and the Financial Crimes Enforcement Network, they have, the Department of Treasury has an entity called LB&I, Legal Business and International. And they pick 3 or 4 different topics to focus on every year. And for the last 6 years, they've focused on U.S. expats, foreign bank account reporting, and cryptocurrency. So if you're an expat with a foreign bank account that invests in digital currency, virtual currency, then you have a much greater chance of them putting their efforts into finding you because they can. And then one more thing, and we can jump into another question. There's kind of always been a don't ask, don't tell mentality. Well, I won't say anything and they won't find out. In 2010, there was this new legislation called FAQs. You might have heard about it, especially if you're overseas opening up a bank account. They'll ask you for your U.S. passport. They'll ask you for your U.S. Social Security number. The reason they do that is because the IRS has signed what's called intergovernmental agreements, or IGAs, with about 114 countries, where it allows them visibility into your foreign bank and financial accounts overseas, just like they would have in the United States. So if you get a Form 1099 or a W-2 or any of those forms, those are IRS forms. You get a copy, the issuer gets a copy, and the IRS gets a copy. That's how they know when you haven't filed your return, because they see all of these forms that are sitting and there's no return to match. With the implementation of these IGAs, what has happened is the equivalent reporting is going from these foreign bank and financial institutions back to the Internal Revenue Service. So before it was, I've worked many years prior to 2010. I'm not going to tell how old I am, but many years. And it was an honor system, and you had to get caught. But now with these IGAs, these foreign bank and financial institutions are reporting directly to the IRS what should be on that foreign bank account disclosure. And it is a disclosure. It's not taxed. You're not taxed on what you have overseas. Your tax is you earn the money. So if you have $20 million in there, you pay tax on it when you earned it. You don't pay tax on it every single year, but you have to disclose that it's there. If you don't disclose, you can pay, there's willful penalties and non-willful penalties. The willful penalties start at $10,000 per delinquent filing. Yeah, and that's a win for us because the Supreme Court just ruled on this earlier this year. It used to be per delinquent account, meaning if you had 10 accounts per FBAR, that's 100,000 per delinquent return. And there's no statute of limitations on
even if you only had throughout the year $10,001.
You owe $100,000 in penalties, and that's for a non-willful filing. The willful penalty, if they determine that you did it on purpose, is $100,000 per delinquent filing, up to 50% of your account balances, and 3 to 5 years in federal prison. And they are locking people up for this. I'm talking about regular people are going to prison. A lot of them are doing house arrest, but it's still, 6 months in prison, 6 months on house arrest.
It seems to me that you could lose your visa. If you have a felony now, house arrest or no.
Yeah, they make sure it's a year and a day. A year and a day makes it a felony. Anything less than a year, more misdemeanor-ish. But they make sure it's at least a year and a day so that it is a felony. Yes.
Wow.
Well, we went online to the government website and digitally filled in the stuff. And like I said, I just follow what they said do.
It's so easy, and it's just disclosure. A lot of people, but there's the Department of Treasury has the where there's smoke, there's fire type, mentality. If you're not going to tell us bank accounts information that we already can see, what else are you hiding?
Right.
So, by not filing, it's almost like you're walking them into, oh, okay, well, this is a good person to audit. I'll also say this before we skip over. This kind of relates to cryptocurrency as well. Before the FAQs regulations, probably about 3, 4 years before the FAQs regulations, the IRS issued a John Doe summons to UBS Bank, and this is pre-FAQs. So basically, they went to UBS Bank, got all their records of any U.S. taxpayer. I don't know how they figured that out, but any U.S. taxpayer, and then they basically just audited, you know, what out of these people, and they were finding people who had delinquent FBAR filings just based on this UBS John Doe summons. Because I remember I was at one of the global firms at the time, and we got the client gave it to us, and so the lawyers got involved pretty quickly. They made us go back and look to see if we asked if he had foreign bank accounts, and we did. He said he did not, and we were like, we can't help you. You're on your own. You have to get an attorney. We can't assist. We asked, you said no. We prepared the returns based on what you said. Good luck with that. They just did that. The IRS did the same thing to Coinbase, which is a cryptocurrency exchange. So if you are also international and you're not reporting your digital currency, you probably got about 2-3 years before we have a similar legislation that comes to make sure that you're enforced. So
You own some digital currency.
Yeah, I do.
You better let our accountant know. I think it might even be up to like $15.
yeah.
It's not much.
It's not. It's not.
But
Was it Dogecoin? It's probably negative $15.
I had some Dogecoin, and I had a little bit of
the big one.
I think I had a fractional share of Bitcoin. It was $100. Maybe I was in all the current digital currency like that.
Yeah.
You
better let her know. I don't look. If they want, they can do whatever they want to do. And if they want to make a big deal out of $15 worth of Bitcoin, one tenth of 100% of Bitcoin, I suppose they can. Like, it's not really worth it. There's bigger fish in the sea, but they're trying to pay bills.
Yeah, there's a disclosure question now about virtual currency on the first page of the tax return, right under your name. Did you have any virtual currency? Yes or no?
It's not worth anything. I just don't get it. I don't know. Look, don't get in my comments talking about Bitcoin.
Yeah, we're not talking about that today. I was just throwing it out there just in case.
I don't understand it. I don't understand why a country would give up its right to currency. Period. I don't want to hear it. I love you. I don't want to hear it. Okay. You said a lot.
Yeah.
So let's get back to the FBAR. I'll ask a personal question because so the first thing that I did was I told our accountant, don't forget we have a foreign bank account. And then that was it. And then Rick did after we talked to you, he went online and said, well, I think, we're supposed to just, go online and fill this in ourselves. I was like, okay. So then I went in and I just did it. And I looked at all the money that I had deposited since I opened it. And that's what I told him I had. And then I said, I think I told him what the ending balance was as of December 31st, 2022. I think. I can't remember now. And then I got, messages saying, we got your stuff, thank you, whatever have you. But was I supposed to do that separate from the tax return, or was I supposed to let her do it?
It's separate from the tax return.
Okay.
Whether she does it or you do it, that's just kind of between the two of you.
Well, I better let her know.
Yeah, please let her know
that I did it. So that it's not double done.
Yeah.
No, because we did not have $30,000 in there. I mean, I guess it doesn't really make a difference because, as you said, we have already been taxed on it.
Right.
Yes.
So it's not, we moved money from an American bank account. You can see the wires, this is not like money coming from out, where'd that come from?
Exactly.
Yeah. I mean, now with zeros and ones, you can trace that stuff. You really can. So, okay. So I'm going to get to your guys' questions. I am.
And so for anybody that didn't file the FBAR is due on April 15th or April 18th this year. If you did not file, it automatically extends itself to October 15th. I don't know why they don't just say it's due October 15th, but I think
Right.
they want to be consistent with what you're already doing. So
Okay.
they say April 15th and then it automatically extends. So even if you don't have an extension to October 15th, excuse me, that FBAR is automatically extended to October 15th. So if you didn't file it, don't worry, you got until October 15th.
So right after this, just go online and do it,
Yeah.
because it is so not worth it. And it doesn't make any sense since they're not trying to tax it.
Right.
Now, okay, so you were talking about the foreign earned income up to $112,000. So we've got people. 95% of the people who watch our channel are either making money from a U.S. company,
Mm-hmm.
but living someplace else, or they're on a pension.
Okay.
And living here. So is there a difference in that cutoff? Because when you said the standard deduction, my first thing is, don't we all just get $12,000 per person standard deduction? Ish. Well, yeah, it might have gone up since last time I checked, but yeah.
Yeah, so it's roughly about $12,000 per person. So if you are on a pension, that is not considered earned income. It doesn't qualify for the exclusion. You either have to be a dependent worker, meaning you are getting paid by someone for your services, or an independent worker, meaning you're self-employed. So your pension income would not qualify for the foreign earned income exclusion. In that situation, though, if you're getting a U.S. pension, then it's likely that you'll pay tax on it in the U.S. But if you're subject to tax in the foreign country and we have an income tax treaty, then it's likely you can exclude it from taxation in that country as long as the treaty provides for it. So you still get some double tax relief, because the whole point is, just because you move overseas, that doesn't stop you from being taxable in that other country, even though you continue to be taxable in the United States.
Right. Oh, yeah, definitely. Can you think, since we're talking about double taxation, can you think of any countries that you've heard, more than one person moving to that we don't have a treaty with?
Most of Africa. South Africa, we have a treaty with. Most of the rest of Africa, we don't. South America, a lot of those countries we don't have treaties with. I want to say Argentina, Brazil for sure, no. A lot of those countries we don't have. Most of Europe is good. Most of Asia is fine. So
Costa
if you're
Rica, we probably do.
Costa Rica, I don't think we do.
No? Oh,
But if you're
wow.
looking, irs.gov, and you can search in the search bar tax treaties, it'll list all of the income tax treaties we have that are in force. And so if you're looking to see if we have an income tax treaty with a country, then go to irs.gov. There are different types of treaties, which we probably don't have time to get into today, but the ones that you're looking for would be on the IRS's website.
Okay. So in we just released a video, but we talked about it about 4 weeks ago as well. We mentioned Kigali and we mentioned Accra, Ghana, and Rwanda. So y'all, understand the tax implications before you leave, before you make that decision. If we don't have a treaty with them, understand what the expectations of your new home country is going to be.
Yes.
Because you don't want to get over there thinking you're going to live off of $30,000 and they're taxing you 20%, and then U.S. is taxing whatever.
Yeah.
And that's just how it's going to be. And now your 30,000 just went down by 40%. So, or whatever, right? So,
without a treaty, there's no release. So, say, for example, in that exact same situation, typically you would take advantage of the foreign tax credit, which is different from the foreign earned income exclusion. The problem is whether or not that income is U.S. or foreign source. So, if you are getting income from a U.S. pension, the IRS is going to say that's U.S. source income, even though it's paid to you while you're outside of the country. The foreign country could say, well, you're a tax resident, so it's foreign source. So there is no foreign tax credit available because each country says that this is mine.
right.
The treaty then would come in and say, well, in this situation, the U.S. has the right to tax U.S. citizens, the foreign country does not. With no treaty, there's no relief.
Yeah. So, see, now some of that I knew, and I knew we had a treaty with Portugal. So that was part of, our decision. What about Mexico?
Mexico, we have treaty. So here's
I
the
figured.
thing too. If you're trying to read a treaty, unless you read treaties all the time like I do, don't read the treaty because it's not going to make any sense. There's another document under the treaty that's called the technical explanation, and it takes that treaty. So the treaty might be 40 pages. The technical explanation probably 120 pages to explain what those 40 pages mean, and it writes it down in plain English. Here is what happens if you have pension income for a U.S. citizen specifically, for a U.S. green card holder specifically. So look at that, and it provides lots of examples too. So this person went to Portugal and they had a U.S. IRA, and this is how their distributions are going to be taxed. So read the technical explanation if there is one, because it'll really help you to digest the information instead of just trying to read the treaty.
Yeah, yeah. So it's not Cliff Notes. It's
Mm-mm.
double Cliff Notes.
Yes.
Right.
Yes. The other way.
Exactly. Exactly. Okay. So you have to file. We have until June, or we have to file an extension, and then we have until October. What other things do people usually get wrong?
The biggest thing that people get wrong is determining where their income is sourced, whether it's US or foreign source, because you have to source your income for the foreign earned income exclusion, and you also have to source it for the foreign tax credit. And like I said, many people assume, well, I'm getting paid by a foreign employer, it's all foreign source. Yeah, but you spent 20% of your time in the United States and you were working. And nowadays you pick your laptop up and you take it with you on vacation. So you're working. Okay, well, that week that you were in the US, at your child's graduation or grandkids, whatever, that
Right.
now, though, that you have to allocate that week out, that's US source income. That's the biggest thing.
Wow.
Yeah.
Okay.
Yeah. Because you took your laptop with you, you were working. So
Yeah.
100% of your income isn't foreign source because it follows you where you're going.
Wow.
Yeah. So that's the
And
biggest thing that people get wrong. They're like, "Oh, I got all this paid. I was working in France. I got paid in France. My employer is French. That's 100% foreign source." It's not. So you really need to keep track of your travel and whether you actually were working when you were specifically in the US.
Okay.
You also
okay.
need to look at other countries too, because other countries have different thresholds as well. So you could
Right.
go into another country, a neighboring country on vacation, take your laptop, work a couple days, and now you have a filing requirement in that country as well that you didn't even know about. Don't you love
Okay.
me? My little box is gonna disappear in a minute.
Okay, so let me get this straight. So this person is, let's just say, working for a French company. They spend a month in the summer in the States visiting family, this and that, and the other. But out of that month, 2 weeks, they have to actually log in and do work.
They have to count those
And they're
2
United
weeks.
States citizens, but have residency in France. So when they file, they have to claim those 2 weeks
Yeah.
for
If they're
as
working.
taxable income. But it's
It
probably not
qualifies.
going to even be enough to be taxable income unless you
Well,
make
it would all be tax.
a lot of money. I mean, you know what I
It
mean.
depends. Yeah, I
Like,
know what you mean.
just
So
let's just
you
say
can
they made
report all the pay
$70,000. Right. Oh, wait. Well, let's say they made $70,000
because you're
a
gonna
year.
report it all. Okay, let's say if
Oh,
we made $70,000. We've got $70,000. You are gonna report it all, and then you're gonna take the foreign earned income exclusion. But because you spent those 2 weeks out of the year working in the US, let's just say you work 100% of the time. So about almost $2,700 of that is US source income. It doesn't qualify for the foreign earned income exclusion. It also doesn't qualify for the foreign tax credit because it's US earned income. It's US source income, even though it was foreign paid, even though it's a foreign employer, even though it went to a foreign bank account. Because your physical body was in the US while you were working for those 2 weeks, it's US source income. Now let's say, so that's year one. Let's say next year you get a bonus for that prior year. The bonus is $10,000. You have to look last year, where was I working? Oh, that's right. I got to take those 2 weeks out of that bonus too. And that's US source income as well.
Whoa.
Stock options, same thing. I earned stock options over 10 years. Oh, I got to go back and I have to remember, even though these are foreign stock options, foreign paid, blah, 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 I have to go back and look at all the times my physical body was in the US working and treat that as US sourcing.
Wow.
Yeah.
Okay. And so then what would be the financial ramifications of that? Let's just take that situation right there where let's round it up to $2,500
Mhm.
of, US earned income because your butt was in the US, plus another like $1,000 from
Yeah.
the bonus, let's just say. So
Okay.
$3,000 is now
US sourcing.
US earned.
US earned.
Okay. So then you're going to take the foreign earned income exclusion on the rest. So then you still got your standard deduction, right? You still got, because we're US people. We still get all of our deductions, credits, exemptions. So if you've got child tax credit, if you've got kids in US universities, you may get educational credit. So you still get other things to offset some of that. So it's not as bleak unless you do make a lot of money. And then that
Right.
10, those 2 weeks could be hundreds of thousands of dollars, and you're just gonna, you're gonna have to bite the bullet and pay the tax on it. Now, let's say you're in a high tax country, and and that country taxes you on worldwide income. So this is getting way technical, so stop me. But if you're in a high tax country, you make a lot of money over and above the foreign earned income exclusion, you still got enough foreign source income. You can also take a housing exclusion on top of that. So look, as long as you have temporary expenses, meaning you don't own your home, whatever those temporary housing expenses are, you can take that over and above that 112,000. So let's say you max that out, you maxed out the 112,000. You still got foreign source income. If you are in a country where they tax you on your worldwide income and there's a treaty that provides for it, you can recharacterize some of that US source income as foreign source as a way to get around that double taxation. And there's just a separate way. You would file an additional foreign tax credit calculation, or it's an additional form that you would attach to say, hey, basically, this country's taxing me on my worldwide income. The US is taxing me on my worldwide income, so I'm penalized. So we're going to take this US source income because there's nothing we can do about it in my host country because I have to pay tax on my worldwide income. So I'm going to treat this formerly US source income as foreign source income for the purposes of the foreign tax credit only.
Okay. Which is why y'all don't just get any old accountant. You can't go to
Right.
Walmart to you know how Walmart has H&R
Don't do that.
Block set up?
It's Jackson Hewitt. I used to work there. I worked there in
Is it
college.
Jackson Hewitt? Oh, okay.
Yes. I worked there in college in the freezer section between the milk and the eggs. I did.
Oh my gosh.
I did. That was my first.
That's almost as bad as spending 1,000 years in pharmacy school, and then you're basically like a shift employee at Walmart.
Yeah, basically.
So Krishan said you were on her channel a couple of years ago. So she says leaving in 2023. So my foreign income credit wouldn't be applicable until I file for taxes for tax year in 2024 or in 25.
Y'all love me because here we go. No, you can get it in 23. So you don't have to take the whole credit in the current year, but you do have to meet the requirements to take the credit. So let's say you're leaving July 1st of this year and you're going to be gone for 6 months of this year. There's two ways you can qualify for the credit. One is to be physically present outside of the country for any 330 out of 365-day period. So, and then the second is to become a bona fide resident of that country, meaning that you were a resident from January 1st through December 31st. You don't have to do both, it's one or the other. So, if you're leaving July 1st, you would have to be gone 330 days in any foreign country, not just, you just have to be outside of the US for more than 30, you can't be in the US for more than 35 days from July 1st to June 30th of 2024, which we've got that June 15th extension. So you would just extend it to October. That can happen. Let's say that doesn't happen. You got a whole bunch of stuff going on in the US. You're back in the US a whole lot, but you establish residency in that foreign country January 1st of 2024. By October 15th, we don't know that that you've met the requirements because we haven't gotten to December. Even with the December 15th extension, you're not going to know. The IRS provides for an additional extension specifically for this situation through January 30th of the year following the filing year. So for 2023, you left July 1st. Your qualifying period would be 1/1/24 through December 31st, 2024. You would extend
Okay.
your return through January 30th of 2025 to make sure that you were gone 1/1 to 12/31. Once that happens, then you would go back to that 2023 return and you would take 6 months worth of exclusion. And then you would just continue filing like regular going forward because once you meet it, you meet it. So that's an additional extension. And that's on form 2350 if you're interested.
If you think you should do it yourself, don't do it yourself.
Yeah, don't do it yourself.
Don't do it yourself. You just asking for a seat. Because one of the things, so Katrina, you do personal tax returns, but then do you also like do fix it stuff for people who jacked up their stuff in the past?
So yes, mostly because I love you all, but I can't serve you all. So mostly what I do is education for other tax preparers. So what I would prefer you do is send your tax preparer to me, and I can help them through this because those relationships. I always say your hairstylist, your barber, your hairstylist, your barber, your tax accountant, your attorney. Like you keep those people really close to you. Your financial advisor. You don't necessarily want to lose them as a result of you moving overseas, but you also don't want them to get your tax return done wrong. So I have created a mission, a personal mission to educate as many tax preparers as possible so that they can assist their clients when they do move overseas to handle these issues. So if you don't have anybody that you trust, yes, feel free to reach out to me. But if you have someone that you trust, send them to me and I can get you taken care of through them because they know more about you and your personal situation than I'm going to know. Plus, I cut people off when they're no longer out of the country. So it's like I love you, I love working with you, but if you don't have any issues, I got to make room for somebody else.
Yeah. So we have heard rumor. Hey, Killer Queen. Hey, Vanessa. Good to see you guys in the chat. We have heard rumor that that the media is finally noticing the exodus, and basically the blacks it to give Krishan some credit. And so that to me that means your business is booming.
It's not just that. It's everyone. I think the political environment of the last several years, if I look at if I look specifically at the number of green cards and citizenships that have been rescinded, I mean, it used to be 1,500 a year. I think during COVID, when the embassies were closed, it was almost 10,000 that year. So for people to risk their lives to give up their citizenship and their green cards, and that just tells you kind of the trend is that people are not, especially our people, are not as tied to the US and feel like there's no place else that we can go because that's just not the truth. Business for me, it's weird because people are always moving all over the world. So people panic and they leave and then they get comfortable and come back. So it's always, you know what I mean? It's always kind of, it's good. I just, I want to make sure that I'm educating people and tax preparers as much as I possibly can. And here to just
Yeah.
spread the word, because I hate seeing people get in trouble for stuff like this. I'm like, no, nobody told
It,
you. No, nobody told you. And stop listening to
it's
people on
kind of
Instagram, unless you're following me on
right.
Instagram.
It's kind of like oh, put your Instagram thing in the private chat too.
Okay.
It's kind of like drowning in shallow water. So Lauren says, been waiting for this. It's so empowering to be able to maneuver in an informed way, right? I'm studying to become an enrolled agent, so I'm taking serious notes.
Yes.
Very good. Very good. Hey, Kim. So, I think 7 years to audit is crazy too.
Mhm.
So we have 3 years to get money that's owed to us, but they have 7 years that we have to keep receipts and all that other
Right.
stuff. I think it's baloney, but
Also,
it
if
is
you
what
have
it
a
is.
refund, that deadline does not apply to you. None of those deadlines apply to you. You have 3 years to claim your refund. A lot of people don't know that. So the deadline is typically for people who owe their return.
Right.
Okay.
But if you don't owe, you got 3 years to claim that refund. Also, the FBARs, no statute of limitation. So yeah,
Ooh.
yeah, they can get you forever.
Does a foreign income exclusion apply to capital gains and dividend income?
Just earned income only. So no.
Alexandria had that same question. Tony Donald, hey there.
Hey,
Sounds like a new name.
new name, I think. Yeah.
If not, sorry, but welcome. If I live in Portugal but travel back to the US and work only in the US, do I have to pay Portugal taxes on that earned income in addition to US taxes?
It depends on if you're a tax resident of Portugal. If you
Yeah.
are, then
Yeah. Yeah, because Portugal doesn't care where your money comes from. They care where you are a tax resident. And yeah. So for instance, they don't pay us Social Security. Uncle Sam pays our Social Security, but because we are living here, we still get taxed, on that Social Security. So
you should look at the treaty for that, because social tax typically they won't, but it depends.
Yeah,
It changed, didn't it? What was the thing where you didn't get?
Well, that was just for NHR, for non-habitual
Okay.
residents. So they won't tax. Apparently, they don't tax veteran or disability. But yeah, my understanding is they tax Social Security. So I will be on Social Security from the U.S. by the time I move abroad. Will I have to pay or file living abroad?
Yes, to both.
Yeah. Okay. And where are you moving to? Because how that's going to look depends on where you're moving to as well. So to incentivize people to move to Portugal, if you signed up for the non-habitual resident and you're a pensioner, be it a private pension or Social Security, the taxes were 0 for 10 years.
Right.
Things change every day, y'all. Yesterday's prices are not tomorrow's prices. We missed that 0 thing by like 6 months.
Yeah.
So all of you guys who are talking about, in 5 years, I'm going to move to Portugal. Maybe it will not be feasible, because like Switzerland, unless you bring in $100,000 a year, they don't want you.
Yeah.
And
Switzerland is so expensive.
Right? It's out of control.
Yeah.
It is out of control. I heard like one Big Mac was like $10, €10.
Oh my gosh. I had a client once that had 5 kids, and he said, bread is killing us. Just making sandwiches for all these kids. He's like, it's killing us.
Wow.
Yeah.
I have no desire. I do want to visit, but I would never want to live there. First of all, it's too damn cold.
Well, and the language is off. So I used to work for a pharmaceutical company that was headquartered in Basel. And so you go in there with basic German, and they speak Swiss German, and it's like, wait, I can't. And it's not even close to a Romance language, so you can't figure it out. So and if they don't understand you, they don't understand.
And and what about their French?
They probably learned French. Well, Germans are better about that. I had a very good have a good friend that's German. He said because of all of the history that they had, they were trained very early to be fluent in multiple languages, so that if they ever left the country, they were not discriminated against for being German. So they had to speak multiple languages in the native tongue, so that if they ever had to flee Germany, they could move around. I don't think in Switzerland they do.
Yeah. So I had a colleague who was born and raised in Switzerland, and she speaks French.
Oh, okay.
Yeah, and Spanish, but no German. Well, maybe a little. Is it better to move money from your USA account to the country you're living in every quarter and keeping it under $10,000 from a tax perspective?
So there's no tax on the money. You can move it however you want to move it. It's just the disclosure. If you don't want to do the disclosure, yes, then that's fine. But from a tax perspective, it's not going to matter if you move $1,000,000 or $500. It doesn't matter. That you can move your money however you want to move it. You just have to disclose that money hit your account.
So we never had more than $9,000 in our account ever.
Mhm.
But throughout the year, we have transferred more than $9,000.
Okay.
So did we have to do the FBAR or was it optional?
If all of your accounts together do not meet or exceed 10,000, you don't have to file
At
an
any
FBAR
one
For the
period.
at
year.
any one point in time. Even if you are passing 10,000 from one account, say from a foreign account into the US and it only hit that account for seconds, you would put it on the FBAR and all of your other foreign accounts. But if that didn't happen, then you don't have to disclose at all.
So I
But it
guess
doesn't hurt you to disclose.
Doesn't hurt.
Yeah,
It
we
doesn't hurt
did.
anything. Yeah.
Because
I mean,
I did it. I thought it was aggregate. I thought if
it is
throughout
aggregate.
the year you transferred more than $10,000, not at one time, but throughout the year. So if it was $2,000 every month, which adds up to 20,000,
Okay.
right, or whatever, 24,000, then yeah, you got to let us know. But we never. Yeah, we.
It's your aggregate maximum value.
I see.
Yeah.
I see. With the dollar fluctuating the way it is,
Ooh.
Greta, when it gets to the point when it's less than 10%, you want to transfer money. I know, like, but there's a chance it could get down. Yes, but there's a chance it could go the other way too.
Yeah.
And I made that mistake. Don't make that mistake. Don't be a Halisi. Seriously, I'm like kicking myself because in September it was like $1.02 to €1. And now it's like 10%. But the interesting thing about it is, so Google was saying the exchange rate was at 9%. So 91 cents equaled €1.
Mhm.
So that means you lose 9% of your money right there, folks. Yeah. That ain't pretty. But when I transferred it, Schwab did not charge me 9%. The exchange rate was like at 6.5%. So do they get a better rate than what you see on Google?
Probably. The bank rate.
Interesting.
Yeah, they probably give you a better rate.
Well,
yeah.
Thank you, Schwab. Because it, like, you know, if you're transferring $5,000 and you lose 10% of that,
Yeah,
that's a lot of money.
it is.
That's like 2-3 months worth of utility bills. Shoot.
That's a smeg.
That's a smeg.
That's a smeg.
if you watch it. So one of our
Penny and
friends,
June, they're here.
are they here?
Yeah,
Oh my
they're
God.
right. That's
So
a
hey
smeg.
Tracy, she is. Do you know what schmeg is? Smeg is. It's like an appliance.
Appliances.
It's she.
Oh, okay.
And she's a cook. She's a chef.
She's a
so
Well,
So we give her a hard time with the smeg. thing.
between Tracy and her Yankee Candles and Uncle Sam. Okay, Uncle Sam's says, "Run me my
All of
money."
all of it.
Yeah, they are not kidding. Okay. Hey, Karen Louise, good to see you. Stethoscope Travels. I live in Florida, so would I have to file taxes if I move to Portugal?
Y'all love me today. So, Florida does not have an individual income tax. So you have to continue to file state taxes if you move to Portugal, but you will have to continue to file federal. If you are coming from a state that is known as a domicile state versus a resident state, then you may continue to be tied to that state, even if you are living outside of the country. I see this a lot with states off the top of my mind: New York, New Jersey, Pennsylvania, Ohio, Alabama, California. It's really hard to break your residency there, especially if you still have a driver's license, if you're voting in local elections, if your car is registered there, if you have a vacation home, so on and so forth. The problem with that is not only do you have to continue to file and pay taxes in those countries, in those jurisdictions, some of them don't recognize the foreign earned income exclusion. Some of them don't provide for the foreign tax credit. So let's say you're in Switzerland and Switzerland has a federal tax, a cantonal tax, which is like a local tax, and you're coming from Ohio, which has a state tax, a local tax, and like CCA, and Rita, you could end up paying tax on that same income 5 times. And for local purposes, for state purposes, you may not get a foreign tax credit. You may not get the foreign earned income exclusion or anything like that. Then, God forbid, you pass away. Now, because you're tied to that state, it's possible that you could have to deal with the state estate tax. I'm in Georgia, in Atlanta ish, not in Atlanta anymore, but in Atlanta. And I've seen that happen before where people have passed away and they have to deal with a Georgia state estate tax in addition to just the logistics of having a loved one pass away while living overseas.
That's why we tell you guys to think about not only the tax implications, but where you are, if you can get residency or domicile in another state and cut all ties
Yes.
From the New Yorks and stuff like that. Colorado, we pay local city tax and state tax, but they're not bad. They're not bad. And we still vote there. So that is what it is. But it's nothing like California or anything like that. So I just said, we're not going to bother. Where was that other question? I don't understand why they need to know about my savings.
That's what it is right now. So I don't know what to tell you. They didn't. You know, and it's not even about the savings.
I think it's tied to money laundering.
It is. That's 100% what it is. It's not about them knowing how much you have in your savings. It's if you disclose in year 1 that you had 10,000 in savings, and then in year 2 you've got $1 million in savings, and you haven't reported that differential anywhere on a tax return, then you just created that trail for them to audit you. If you show 10,000 in savings 1 year and then you don't file an FBAR anymore, but the reported you got $1 million in savings, that's an audit trail for them. So it's more about just disclosing the information and being honest on your tax returns also, so that you don't have to worry about them putting resources to determine what, if anything, you're hiding.
Yeah. And it seems to me that they're more interested in what we're doing than the people who we know are hiding money.
I think it's easier to audit people with international exposure just because it's a smaller population. If you're, I mean, there's 700,000, if there's 700, or was it 700 million people in the US, that's like a needle in a haystack. There's probably 600,000 or 700,000 people that file tax returns with the foreign earned income exclusion. So it's a much smaller population. It's a lot easier to audit. And 9 out of 10, they're going to get something out of you. They're going to find something. So it's just easier to, I mean, those returns are a lot more complicated. And so if you're not dealing with someone who has a lot of experience in this space, then yeah, they're going to get something out of you. If nothing else, they might find a delinquent bank account, and that's 10 grand.
See? And they need to pay the bills and keep the lights on at the IRS, y'all.
Dang, they ain't got to take that much, though.
So you're right, Alexandria. Ignorance is not bliss. Not if not. Like you have 2 accounts and that's $20,000.
Yeah.
And you may only have $10,001 in them combined. And now you owe 20? No. And so, Gwen, the reason why we're talking about federal taxes and not state taxes is because there's 50 states. And, you know, but everyone and every state is different, but federal is federal. Federal is everybody. So, you know, 90%, well, 80% of our audience are Americans, probably more than that. And so.
And like you said, you get time. They give you the time to, you know, report yourself or you know, put stuff in. So it's not like you got to do it now and that's it, you know, because it extended itself to October. So FBAR.
Right. And, you know, I think so many folks, like there's been this movement to move abroad, and some people they looked around, they looked at the news, they saw the shootings, they felt the stress and said, I'm out. And then they didn't do as much homework as they thought they did. And FBAR, what's that, right? So I knew about that. I didn't know what it was called, but I knew that we were supposed to disclose any foreign bank accounts. And I didn't know that there was a threshold. So as far as I'm concerned, I'm going to err on the side of conservative. Like I got $2 in there. I'm a file the the $2. So you know, I'd rather be safe than sorry. And there was a time in my life when I was ducking and dodging, but that was before computers.
Mhm.
You can't do that no more. Like, you know, have a bunch of different names and just show up and, and do whatever. Them days are over. Okay, so Pam asks, is it feasible to hire a tax expert once we move to our country of choice? I'm not good with tax stuff at all. I would say, Pam, yes.
I would say yeah.
So, and here's the thing. So we have someone in Portugal that was referred was referred by other immigrants here, and they had great experience. So we called her. We had a good experience. She's already saved some friends of ours money because they didn't know local laws. And you know, if what you are doing is depending upon YouTube for the law, I mean, what we're telling you, whatever comes out of Katrina's mouth, you can count on. But whatever comes out of our mouth, it is something for you to do more research on, because we are not the experts.
Not the professional. No.
We are not the experts, but we will bring up things to say, you know, this is something that you need to consider. This is something that you need to ask more questions on. And so there is no way, you know, Pam, you don't want to move abroad and have to be worried about this stuff. Pay someone.
Yeah, we ain't going to tell you, well, no, you don't need to
pay someone.
Yeah, get a tax expert.
Because she has already told us stuff that we had misinterpreted what we had heard from other YouTubers. The only thing that I can say, I listen to what YouTubers say, and then I say, okay, that's something I need to do further research on. They've brought up something that I don't know about. So now I'm going to go call the professionals. And I misinterpreted what they said. And so I'm glad that we talked to her, because now we know where we stand and what we need to do. And for the consultation, she charged us €50. I ain't paid, like I was paying my tax person in 2002. So 20 years ago, I was paying hundreds and hundreds of dollars. Like I have never had a consultation that was only €50.
Or $50
for anything.
Yeah.
Which would be like $52 in 2023. So you get an expert, and oftentimes it's going to be a bit more affordable than what you have to pay your US person. I pay my US person. She has slowly given us discounts as we've been with her for a decade, because now she just knows it and she doesn't have to go looking for stuff and going back and forth with us. So now it's gone down from nearly 1,000 to just a few hundred. But shoot.
Say what?
Hi, Katrina. Igami says, do you work with day traders who live abroad or know of CPAs who do?
I do. So I don't know if you missed this part. Like I definitely do take on some clients. But it has to be a good fit, because education and, you know, things like this is more where, you know, I like to spend my time. But if you need a recommendation for someone, if I can't help you, then I can definitely help you find somebody.
So if you are a nerd and you like to pay attention to this stuff, I just put Katrina's Instagram in the chat, and I'm going to go grab her website. So if you need to send your tax person to her to get educated, then you know where to send them. Okay, so I just put that in the chat. So I want to talk about estate planning. I did have that as a question, but where was I in the questions here? I know I didn't ask that. Ooh, 7 ballers. Hey there, Penny and June. And countries that don't recognize. Okay, I hadn't asked that. Could you advise Katrina? No, I haven't asked that yet. Where was I? Lord.
So many good questions.
There's a lot of questions. Okay, we're gonna have to speed this up. Okay. Our Black Utopia, is the FBAR only required if you have 10,000 or more at one time during the year, or is it all of the amounts throughout the year added up? See, that's what I thought, Alexandria. I thought since I had made all these small deposits and together it all added up to more than 10,000, I was required to file the FBAR. So they got a freebie out of me. Like, who cares? At least they can't say I didn't do it.
Right.
But do you want to just repeat that?
Yeah, it's your maximum aggregate value. So all of your foreign bank and financial accounts together at their maximum amounts have to be 10,000 or more to have to file
at the same time.
It doesn't have to be at the same time, just at some point during the year. So if one account had 10,000 in it and then you moved it to another account, then technically you would have 20,000 worth of reporting and you would report all of those.
Okay. Do you have to file the FBAR if you're just getting Social Security?
It doesn't matter.
Yeah.
It's any bank financial state. It doesn't matter what kind of income you're getting because it's not part of your tax return. It goes to the Financial Crimes Enforcement Network,
Right.
which is sister organization of the IRS. They both sit under the Department of. So it doesn't matter what's on your tax return. It's even if you don't have a filing requirement. If you made less than your standard deduction, that FBAR is still due if it qualifies.
Yeah. So Greta, let's just say you're getting the max or near it, like 3,000. So you have $36,000 per year. You could conceivably have $10,000 in a foreign bank account. Or you're just pulling it out of your savings and transferring it over. You could conceivably have $10,000 in your foreign bank account. That's not to say that you're going to be taxed on that. So if you're joining late, you've already paid taxes on the income. If you've already paid tax on the income, you ain't going to pay taxes on the income because you've moved it around.
Right.
So Monica, I know you're new. If you put a Q, I will not miss the question. If you put a Q in front of your question or something like that, I won't miss it, but I see it. So I'm going to go ahead and what if you start your own business in another country?
Oh, Monica. So I always say, do what works best for your business. However, when you start setting up businesses or registering existing businesses in another country, you create what's called a controlled foreign corporation. Basically, we're talking filing, penalties, tax return costs just went up by about anywhere from $3,500 to $5,500, and that's on the low side. So an LLC is a disregarded entity for U.S. tax purposes, a single member LLC. So if I start an LLC myself, I'm the only person. I don't have to file a separate form. I can attach my Schedule C to my U.S. return. I register that LLC in Portugal. Now I've got a controlled foreign corporation. I have to file Form 5471. Penalties for not filing that, I think, starts at like 10,000 and goes up to 50,000 for every 30 days that it's not filed, and so on and so forth. So if you have to register your bit, just because even if you register it as an LLC equivalent, depending on what that country's definition of an LLC or disregarded entity is and the US's definition will determine if it's actually a disregarded entity. Let's say it is a disregarded entity in that foreign country, you still have to attach another form, which is the 8858, which is where you disclose having a foreign branch or a foreign disregarded entity in another country. Even if you're a sole proprietor, meaning you have your LLC and you take that laptop overseas and you're working, you technically have a foreign branch of a U.S. entity, and you have to file that 8858 also. So it gets more complicated. Just your tax return preparation cost is going to go up substantially.
Oh, wow.
Just leave it at that. Unless you're a sole proprietor, then it doesn't go. It's going to go up, but it's not going to go up that much because it's just one form to file. The 5471 is a monster.
Yeah. So and Monica, it's not necessary. Like, I think the first thing people do when they say I'm gonna start a business is go file some paperwork, and they ain't even got a customer. So you're creating costs and you don't even have a customer. Now, I don't know about you, Monica. I obviously don't know. But the most important thing about having a business is having customers, having paying customers. And then, you can inquire, like we talked to this tax person. I have no desire to have our business registered in Portugal. It just doesn't, like, we're temporary. We're like, they only gave us temporary residency. And even though our intent is to stay indefinitely, they have not told us we can. So
Mm.
why should I set up a Portuguese business and then add more headaches and stress and have to learn their stuff? And I just figured out what we're doing in the US after having a S corp for 20 years. So so it doesn't necessarily make sense to go that route, especially when you can do a doing business as type of thing. So before you start registering stuff and all that other stuff, talk to your person in the United States and see what is required on that end, and then talk to the person in your new country and see what they require, and see if it's absolutely necessary. It is not absolutely necessary that we do that here. And let me tell you, here in Portugal, if you're bringing in negative money, you still have to pay the IRS, the Portuguese IRS, just for having an entity, and you ain't brought in no cash. Nah. I don't think so. So what about Social Security? Do you pay taxes on that? It
Yes.
depends.
Well, I mean, if you're below the threshold in the US that where you would have to pay, you wouldn't have to. But otherwise, yes. Social Security is not going to be exempt, especially for a US person.
Yeah. 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 And so, yeah, any money that you get, you have to pay taxes on, conceivably, unless you've got enough exemptions so that you don't have enough taxable income to have to owe,
Correct.
right? Okay. Oh, so KB, if I work abroad and am paid a tax-free income, like a 1099 type of person, what's the best way to manage my finances? Should I route excess funds to a US bank account or a foreign bank and then file the paperwork?
If we're talking about someone who's self-employed, then I would just say the recommendation would be the same as if you were a domestic person, and look at making quarterly estimated tax payments so that you don't have to deal with that big tax burden at the end of the year. It doesn't matter if it's paid from a U.S. bank or a foreign bank; the IRS doesn't care.
They need to know
So
they money.
Mhm.
if it's going to go through a foreign bank, then you're going to have that F bar. If it goes through a U.S. bank, then you wouldn't. But and just to be clear, the IRS can see what's in your US bank account too. So it's not that this is something new. They're just asking you to be forthcoming about what's in your foreign bank account because they can see it. They see what's in your US bank account, they see your transactions. They can see you wiring funds from a US bank account to a foreign bank account and then not filing an F bar. So it's more about disclosing, and I know I sound like a broken record, but it's true. It's more about disclosing what they already can see than it is about you giving them information that they don't have.
Okay. So I'm going to ask a question about estate planning and estates.
Okay.
What should people know if they are, okay, they're U.S. people? I'm just going to say for us. Might as well ask for us. So, so we're U.S. pensioners. We have an estate. The estate has two real estate holdings and some other stuff, but basically that's it. What should we know, being tax residents of Portugal and of the United States?
So the US side, it sounds like you're pretty covered because you know, when it's time to fund the estate, everything will go through the estate. The trustee will manage the distribution of assets and things like that. You may have that additional, you're definitely going to have a federal, well, you may have to file a federal state tax return. You could potentially have to file a state tax return as well. because we're US people, it doesn't matter as much that we live outside of the country. The US side is going to stay the same, and it's going to be treated just like you were living in the United States, right?
Okay.
It's that you might also have a foreign issue, foreign taxes that you may need to settle on those funds as well. A lot of times, especially this is where a treaty comes into play, if those assets are located in the United States, a lot of times the treaty will say the US only has the right, especially if we're talking about physical assets like real estate, real property, things like that. Then a lot of times the treaty will say that only the US can tax these physical assets that are in the United States. But going back to kind of a previous comment, that's why you get somebody on the ground in the country that you're going to, because they can tell you what types of things, because you may have a trust for US purposes, but that trust may not be sufficient to protect your assets in that foreign country as well.
Right.
So that's kind of the biggest thing to be aware of. It's so that's one thing. And then just on the off chance that this happens, if you have a family member who passes away and they're a non-citizen, non-resident of the United States, and they give you your inheritance, typically inheritance is tax-free in the United States unless it's from a non-citizen, non-resident of the United States. So if that person is or a green card holder, there are specific limits on how much money they can give to you or transfer to you before it becomes a taxable gift. Typically, when you give a taxable gift, the person who gives the gift pays the tax. If you're a non-citizen, non-resident of the United States, you don't have a tax filing requirement. So then you, as the recipient, would have to pay tax on the gift. So I have a client now where her mom passed away. She got 300,000. She's from Israel, Israeli shekels, and now you have to pay tax on that. Normally, it would be treated as an inheritance, and you would just get it. But because she was a non-citizen, non-resident at the time of death, and she transferred that over to you, that's a $300,000 gift that you now have to pay tax on.
Ouch.
Yeah.
Ouch.
Yeah.
And she can't, if she bought a home that she lived in, she couldn't avoid it.
It's too late. It's already a gift. It's a gift at the time of transfer.
Oh.
Yeah. Yeah.
If you are a digital creator, that's us, and renting a 2-bedroom apartment in Lisbon, that's us, kind of. Can you write off a portion of your rent if one of your bedrooms is your office?
Yes. Yeah. You get the same deductions, exemptions, credits that you would in the United States. Almost the same. Mostly the same.
Okay.
So, but yes, yeah, that's the home office deduction. Yes, you would get to take that just like you were in the United States.
This is a good question.
Come on now.
How would they know if you work while traveling?
They don't know. Well, nope, we're not going to do that. You would think they don't know, but we tell on ourselves. How many times have you seen somebody on Instagram on the beach with their laptop talking about I'm working and I'm on vacation? Like,
this
we
is
tell
my
on
current
ourselves.
situation.
Yeah, exactly, my current situation. Like, we telling on ourselves. I had a client, I'm not going to tell his name, but he was a CEO of a very large company, and he did not want to disclose his U.S. presence. I said, I can Google your US presence. It's all over the place. If I put your name in, I can tell when you're in the United States. You vlogged the whole thing. The IRS can see it too. And we ended up having to drop him as a client because he refused to disclose his US travel. So it becomes an integrity thing. You don't have to tell them the truth if you don't want to, but then what happens is it becomes the difference between a willful violation and a non-willful violation. A non-willful violation, let's say for FBAR, it's 10 grand. I didn't know. I'm sorry. As soon as I found out, a lot of times getting people into compliance, that's the route I go through. As soon as I found out, I came into compliance and the IRS backs off because they're like, oh, okay, they came into compliance. We didn't catch you. You found out what you were doing was wrong and you came into compliance on your own. We're going to let it go. Versus I knew it was wrong. I continued to do the wrong thing. And, now I'm caught. Now that $10,000 penalty is $125,000 penalty. Adjusted for inflation, I think it's like $160,000 penalty. So it becomes a difference between willful and non-willful violation. So they don't know, but I mean, we tell on ourselves.
Yeah. Yeah. Look at me. Here I
Yeah.
am at the
Oh
beach in
God. Yes.
Miami.
Hold up. With my laptop. You know.
Hashtag soft life,
Exactly.
Yeah.
Hashtag work life balance. And it's like,
Right,
guys, come on, you
exactly.
just told on yourself.
From a tax perspective, living on less can benefit you.
Yeah, that's just a life perspective, though. When you spend less than you earn.
Yes. Can you use deductions to move overseas? Say as TEFL, is that how you pronounce that?
TEFL?
Yeah,
Yeah,
English
I
first
know.
language.
I know what that is, but yeah, TEFL teacher example, moving expenses.
No, they got rid of moving expenses with the Tax Cuts and Jobs Act. So no. Can you use deductions to move overseas? Not like that. There's not going to be a way to take deductions and put cash in your hand like that. Moving expenses aren't deductible anymore unless you're in the U.S. military.
Wow.
Yeah.
Wow. This is so eye-opening and overwhelming all at the same time, but necessary. It is. Like, I'm not gonna lie, y'all. She lost me a couple of times there. And
Hey,
I consider myself pretty.
I'm just sucking it all in because like y'all lost me a long time ago after we said hi, my name is. So I'm like, hey, I'm with y'all. I'm
That's
Yeah,
just
it's
why you
listening.
hire people. Because the thing about it is you don't know what you don't know.
yeah,
And I get you, Pam. But here's the thing. Call the experts.
yeah.
Work into your budget money to pay experts because it costs more to fix crap than it does to just do it the right way originally.
Yeah.
That's been my experience.
Mhm.
Katrina, am I on point there?
100%. And even so, even some of the stuff we were talking about, the foreign gifts and the controlled foreign corporate, I don't do that. It is all I can do to stay up to date on individual tax issues relating to people. When you start having companies and moving them, I've got two, three people I can send you to. Foreign trust, there's another thing, foreign mutual fund investments, foreign pensions. If you contribute to a foreign pension, especially if you go someplace like Australia or Singapore, where you can take that pension with you as you move around the world. People love Australian supers and Singapore provident funds. Um, those become what's called passive foreign investment companies. That's another filing. That's another $10,000 penalty if it's done wrong. So I mean, it gets nasty because people just go overseas and they do whatever and they don't think about it because I mean, and you shouldn't. Let's be clear. You should think objectively about it, but don't limit your lifestyle because of your tax return filings. However, make sure that you have people in place that can assist you to make sure you stay in compliance.
Exactly. And put it in your budget to pay these people so you ain't stressed out about it.
Mm.
So in essence, the old adage of what is guaranteed is death and taxes.
Pretty
And
much.
Auntie Trey, I don't know what to tell you. Yes, yes. So you guys just bookmark this so you can rewatch it, and then like if you are getting if you're not moving until 2024, bookmark this so you can rewatch it again and you can get your stuff together. Could you advise Katrina how best to find a qualified tax advisor? Is there a database or website that I can research? I do not currently have a tax advisor. Ooh, but I want to hire one.
The IRS, if you're looking for someone that is just tax specific, the IRS's website, they have a list of enrolled agents. These are um, people who specifically have very deep and heavy tax knowledge. There are also websites out there where you can find tax advisors. I found myself on some of them that are kind of, I don't know how reputable they are. Um, Depending on how much money you have to spend, if you want someone who can handle all of this stuff, including your U.S. and your foreign returns, you might want to look at a global firm like an Ernst and Young, a Deloitte, Price Waterhouse. That is going to cost you a whole lot of money. But depending on if you have a substantial business, then that's the kind of company you need to get involved in, especially if you're expanding in multiple countries. If you have a business that's expanding overseas, because they, with one phone call, can find out what's going on in Ghana and what the tax responsibilities are. I do not have that type of business, but because I worked for those firms for so long, I have contacts all over the world. So when people call me and they have those questions, I can just send an email to somebody and say, "Hey, we haven't talked in a long time, but I have this question for a client. Can you give me an answer?" And typically they'll just give me an answer.
That's nice.
Yeah.
That's nice.
Yeah, that's good.
So
Yeah.
I always forget to do this, y'all. If you find this information helpful, please hit the like button and then share this information, share the video
Yes.
with other people that you know who are thinking about moving outside of the US. I stay panicked in the US.
They gonna stress you out if you
Monica,
move.
I'm telling you, because y'all, if y'all don't stop sending us every time somebody gets shot,
Oh my gosh. Ugh.
every other day I'm getting something from you guys. We love you,
Mm,
but we trying to. I'm trying to let go of this PTSD, and you guys are not helping me.
yeah.
We would never know about this without our Rick and Halisi. Okay, I read Our Rich Journey and Halisi.
She wrote Rick on the second line, though.
Okay, there we go. Rick and Halisi. Thank you, Pam.
Thanks, Pam.
Definitely. In countries that don't recognize the Roth IRA as a tax-free thing, okay, are you taxed on your total withdrawal or only on capital gains?
Both typically, unless we have a treaty that says otherwise.
Yeah. I don't believe Portugal taxes on dividends. But don't quote me on that because I don't know why I think that. I can't remember. I thought with the NHR, Portugal is only taking 10% of Social Security, but it all depends on the source. Yeah. So yes, Krishan, 10% on pensions, which includes Social Security. So any private pension, government pension, Social Security, it's 10%. And you are allowed write-offs. So at the end of the day, you might not be paying a flat 10%. Pinky, I believe it is the Social Security one. Don't quote me on that. Do your homework. But people who have it have told me that. Now, they might not be taxed because they got to Portugal when it was zero.
Yeah.
But I have heard that Big Mama and them was not getting taxed. Do your homework, but I believe that might be the case. I did transfer. Let's see. I did transfer and the dollar dropped. See, Lord, I'm telling you.
Yeah.
I'm telling you. This time last year, we were like, well, not really this time, but like by the summertime. By the summertime, we were straight out balling, right, 7 ballers. All right, put a Q in front of your question because we are at an hour and 22 minutes, and I do not want to hold up the lovely Katrina all day here. She got kids and everything else.
Yeah, we know she's smegified. We're gonna start calling her Smeggy. We love you, Penny.
So if you haven't, you guys Google the Smeg because it really is some nice stuff.
It is really nice.
If you like to have nice appliances and you love cooking, if you just off again, on again cook, it's not worth the money. As somebody who is into financial independence, it is not worth the money. The exchange rate right now is €1 to 90 cents. Yes, that's bad.
Yeah. Normally the euro is stronger than the dollar.
Well, that's what she means. So you get, so for €1, you only get 90 cents of
Right.
dollars. So if you transfer
that's right.
$100,
I'm
right, you're only going to get €91 or 90
Yeah.
euro and 70 cents or something like that.
Yeah.
So it has gone down since Friday. But Greta, just like I said, it was about that, or maybe it was at like 91 cents for every €1. But when I did the transfer on that day, I got like 96 cents as opposed to 91 cents for every dollar. So maybe our banks get something, or maybe because it's trade. I don't know.
It might have
But
been.
I wasn't going to say anything just in case they didn't realize.
It might have been a Charles Schwab thing.
It could have been a Charles. I think it was a black thing. I think it was a black thing. They said, you know what? We have oppressed them.
We're gonna hook you up.
We're gonna hook a sister
Oh, 5
up.
cents.
I doubt it. I doubt it.
If we move to Florida for a few months, first from New York City,
New York State,
state, before moving to Portugal, do we have to hire a lawyer to help end our ties with New York?
You
Do you
don't
know
need a
anything about that?
lawyer.
Don't
You
need a
just
lawyer.
need somebody who can help you break. I mean, so there's depending on the state, it's going to depend on what you need to do. But you would have to transfer your driver's license to Florida. Make sure that you any rental properties or anything, get rid of them, or transfer them into like a trust or something like that. Change your voter's registration, change your things like that. If you're still treating New York State like it's your home, so for example, you're going back there for your doctors, if you still have ties to any religious organizations and clubs and things like that, the states can look at that and say you never broke your ties, you just moved your mailing address. So you just kind of have to be pretty strategic in moving your life the way it looks on paper to Florida for a few months first, and then you should be fine.
I broke up with New Jersey.
There you go. See? Yeah.
And what are the best domicile states? I live in Indiana right now.
No domicile state is a good state because domicile states are harder to. You want to go to a resident state or a zero tax state. So zero tax states, Texas and Florida are the most popular just because of the weather.
Nevada?
Nevada is one. I want to say there's one in the Midwest. I want to say Utah or Iowa. There's like 6 or 7 that are zero tax states. Domicile states, depending on the state, you have to some of them. So if it's a resident state, once you leave there, then you're gone. If it's a domicile state, you have to establish a new domicile, and depending on the state, it may have to be another U.S. state. So for Georgia, if I leave Georgia and move to Portugal, I didn't establish another domicile before I left.
Right.
Georgia is still my home state. They're not going to let me go because I'm still domiciled there. I haven't lived in Indiana in a long time. I can't remember how Indiana is. It's not as hard to break residency. Illinois is a lot more difficult. Indiana, I think, as long as you leave, then you're gone. But don't quote me on that. Double check the Indiana Department of Revenue website.
And I think we answered this, Tanisha, but you can also Google it. But yeah.
There's like 6 or 7.
Yeah. Okay, Marguerite. Tennessee.
They just charge interest and dividends. That's it.
I guess you don't really have to live there, but
you got Opryland.
It's pretty.
Yeah.
And green. I remember that, but I don't do the South. I'm moving to Lisbon in September. My bank account was opened on April 19th. I have not funded it yet. I think that's what you mean. Do I have to report that I opened a foreign bank account this year or next year?
No.
So it's all about having $10,000 in it.
$10,000.
Yeah.
Not 10,000 euro, but $10,000.
10,000, the equivalent of 10,000 US dollars.
Okay.
So that's another. Yeah. Because not 10,000 in local currency. The equivalent of 10,000 US dollars is what you have to report. Yeah.
Right now, that's less in euro, but there was a time, this much time, when it was the opposite. But but let's use Mexico, for example, right? So where I know that the exchange rate is changing because I've heard the complaints, but you still get a lot more bang for the buck. So it is the equivalent of $10,000 in that local currency.
Correct.
Make note, y'all. Disney girl Tinkerbell. Hey,
Yeah,
new name. Welcome. I just established residency in South Dakota. I think
yeah.
South Dakota
I think
sounds
they
like a
have no
state
tax.
that wouldn't. This sounds
Mhm.
like a place that wouldn't have income tax, don't it?
Yeah, I think South Dakota is one of them. Yeah, they don't have one.
To cut ties with Missouri prior
Mhm.
to moving to Panama later this year.
Okay.
Well,
Okay.
she's on the right path.
Yep. Yep. We've got a lot of folks wanting Panama. That's right. I saw the IRS electric bill and it was over $200,000 a month. So, Katrina, are you taking on new clients? LOL.
So if you do not have a tax preparer, what I would prefer is that you send your tax preparer for me so that I can train them. I do take on some clients, not as many, because I spend the majority of my efforts and energies in education and things like this just to kind of get the word out. But if you have no one else to turn to, then you can contact me.
But look, don't be stressing her out. Do
No, you're
not be
not gonna stress
stressing
me
our
out.
sister out. Don't even try, because we are right. We gonna
Yeah, we're
so
not doing that. You're not gonna
right.
stress me out.
So I mean, and that's the thing. So, do you ever plan to move out of the United States?
I at one point it was an absolute yes before I had my kids. I don't know now. I mean, it's possible, but I don't know. I haven't thought about it. I like to visit. I don't mind the US so much. I mean, yeah, we got some problems. We got a lot of problems, but it's like that family member that gets drunk at the cookout all the time. It's like, yeah, but that's just Uncle Willie, you know? That's kind of how I feel about the US.
Until Uncle Willie starts pulling out his gun and saying,
Oh my god.
what you
Yeah.
gonna do?"
Oh my
You
god. Yeah. So
know.
it's possible. It's possible. I haven't, I at one point I was dead set on moving to Germany. I love Germany. Um, Beautiful country. The food is good. Um, that's pretty much all it takes for me. And so, now I don't know. I haven't thought about it so much. But I know that I do have little kids, as you can hear them in the background. But we are gonna start hitting country after country. I was waiting for my
Good.
youngest to turn 3 so her face would set for her passport.
Right.
So, but I want them to have as much of a global experience. I don't want them to think that this is just it and that,
This is it. Yeah.
riding around and going from state to state. Like, no, let's look at all the stuff you're learning about in your world history books. Let's go and learn about that kind of stuff, kind of
Mm.
hands-on type stuff. So that's kind of plus I'm a nerd, so like let's get some
There's
education on vacation.
They are going to be so blessed. We do have someone in the audience who's moving here with more than 3 kids,
Ooh,
and they're little kids.
Yeah.
okay.
Yep.
Portugal is good. There's like 5 or 6 countries. I work with this International Living magazine to do their conferences, and Portugal and Costa Rica are really really popular. Malaysia, I want to say, is another one. There's like 5 or 6 countries that are really really popular for expats this time. No, okay,
Yeah.
cool.
So Tunisia, she's in the States.
Yeah,
She's in the States. So I did put this in again, you guys. So that is her website. If you, I'm posting it again. If you want to send your tax person to Katrina, who helped you with your tax consultation in Portugal for €50. Girl, I can't remember her name, but I have her in my contacts. So if you want to send an email, I can do a referral. Hello at ourblackutopia.com. Um, could you enlighten us by sharing your tax person in Lisbon?
Same question.
So same thing.
Send us an email.
Send us an email. Can you still contribute to IRAs and get the U.S. tax breaks while abroad?
potentially. That's a lot more complicated question than we can get into. In most cases, yes. But it's going to depend on how much money you have, how much money you're making. You might have to do backdoor IRA contributions, which are not going to be tax free. I work with a lot of financial planners that service international people as well. So if you're looking for a referral there, then just let me know.
That's a good question. For the FBAR is the 10,000 threshold in US dollars, for example. Okay, so we did answer that. You got it, right? So
Yeah.
the equivalent of the value of 10,000. So if that means 20 million rupee or whatever they're
Yeah.
called,
Hmm.
and that equals 10,000 US dollars, then F bar it, baby.
All right, baby.
Um, okay. Kay Briggs, what about veterans' disability and can they be taxed? What are not taxed in the US? We are not taxed in the US, thinking about moving to South Africa, which does have a treaty.
I'd have to look at the treaty to
Yeah.
confirm. Yeah. And
Yeah.
are they your benefits? Are they somebody else's benefits? You know what I'm saying?
Right.
It can get a little bit more complicated. So I would have to look at that to the treaty. That I can't say based on that information.
So pay her consultancy fee. I'm sure
Not
it's
50 euro.
I'm sure it's Googleable. And so for anyone listening, it is my understanding that they're not taxed in Portugal, that US disability benefits are not taxed here in Portugal. It is my understanding. I don't hold me to that. Don't come to me saying I owe you some money.
Because you see,
Because you had said that. Does the FBAR also apply if you don't have a foreign bank account, but you move some funds from a U.S. bank account to a
revolt,
Revolut and or
Revolut,
Wise
or
multi-currency debit cards? Oh, those things.
So you'd have to look at the institution where your account is held. So let's say, for example, if you, I know this isn't a thing, but let's say you have basically, let's say you have an account at a U.S. bank that has a foreign branch, but all of your transactions were done at the foreign branch. That's a foreign bank. So just you have to look at the financial institution that's holding. This is my rule of thumb. If they can issue you a 1099 at the end of the year, then that's a U.S. bank. If they can't, it's a foreign bank. So if you get a 1099 INT, DIV, 1099B, or 1099 consolidated from them for any interest or any income earned, now in that case you probably wouldn't, but could they give you one? If they could, then that's a U.S. bank. If they cannot, or they they give you something else like a 1042S, then that's going to be a foreign bank. I had a colleague that used to say, if it feels good, they're going to tax it. So when in doubt, just put on FBAR.
And TransferWise is an American company.
That's what I'm saying. It doesn't sound like that would be something that you would. It would have to be a foreign, but just because it allows for multiple different currencies doesn't make it a foreign bank. The whole thought process behind this is for the IRS to see funds that you have sitting outside of the United States. So, like when I was younger, typically your inheritance is not taxed. It just depends on how they give it to you. Like life insurance proceeds are not taxable. But if somebody hands you wads of cash, if it's over the threshold, then you start getting into estate tax. Like how much is their estate worth and who are you to them? Because then there's the generation skipping transfer tax. If it was your grandfather that gave it to you, it would be taxed. But if it was your father, it wouldn't. So possibly.
I think Courtney was asking a question.
Back here?
Yeah, right there. An inheritance tax.
And
if it's Nanny and Poppy, you probably got generation skipping transfer tax. But those taxes are paid by the person that gives the funds or the estate of the person that gives the funds, not the recipient. If the person giving the funds is a U.S. person, it depends on how they give it to you.
Yeah. So yes. Okay. So yeah.
Because normally the estate would pay the tax and the person getting it wouldn't.
Right.
So think about it like this. It's not that it's tax free. It's that you don't have to pay the tax because somebody else did.
Somebody,
paid it for you.
Even technically, if you get an engagement ring from someone, the gift tax threshold is 16,000, I think. If it's over 16,000, the person that gives you that engagement ring is supposed to file a gift tax return and pay the tax on that gift.
What if you don't get married and you give it back?
As long as it's done in the same tax year, then that's fine.
Then it's cool.
Take your ring. If baby boy's paying that much money for the ring, he better be a cajillionaire.
That's a lot of money for a ring.
That's too much money.
That's a lot of
That
money.
money should be invested in the stock market or some real estate or something.
Yeah.
Something that really increases in value and
Right.
not fake
Piece of
increases in
jewelry.
value, because most of the jewelry, even at 16,000, is not investment grade gold
No.
or diamonds. It's just marked up.
Yeah.
When transferring, wiring money to purchase a home in Mexico, are there any tax liabilities?
So the tax does not happen in most countries at as you move the money. Moving the money does not create a taxable event. Earning the money creates a taxable event. Moving money you've already earned to another bank, you're going to have bank and wire transfer fees, but
Mhm.
you're not going to pay tax because you didn't do anything to create a tax liability. You're taxed when you earn it, not when you move it. You can move money all over the world. All you're going to pay is a bunch of bank and wire transfer fees. And bringing money into a country in most cases is not going to create a tax situation. It's
Yeah,
earning the money in that country that causes the
right.
tax problem.
And that's a good rule of thumb. I'm a US resident, my parents are not. If they pass and I sell their house, do I need to report that money and money from their bank account that is now mine?
Yes. Yeah. You're going to have to report their foreign bank accounts. If you have signature authority over those foreign bank accounts, you need to be reporting them now. If you sell their house, so most U.S. taxpayers are able to exclude the 121 exclusion up to $250,000 of gain, 500,000 if you're married. You're not going to have that because it wasn't your primary residence, so you're going to have a capital gain on the sale of that house. And then also, depending on how much all of that is, you might have a foreign gift that you would have to report as well.
It gets
Y'all having fun
technical.
yet?
It gets technical.
Yeah, it does.
What is the best way to get started with foreign taxes and education before becoming an expat? Besides listening to Our Black Utopia and hitting that like button?
And subscribe. Read a lot of books.
Yeah, no. Well, actually, I have a book coming out later on this year, so put a
There
pin
you
in it.
go. Buy her book.
So, but also, I do have on my website, I have a webinar on basic expat taxation that talks about this stuff. So, and it's free, so you can just go to my website and it's on my homepage. Let me see, is it still on there? It should be on there. So if the link doesn't work, give me till tomorrow to get it updated because I think I had it expire after tax season, but it'll pop back up. So tomorrow, check my website, and there's a free webinar on intro to expat taxation, and that gives you kind of a lot of this stuff and more. I think there's some calculations in there, things like that.
Okay.
So
And I just posted her in the chat. I just put her website in there again because I know if you come in late, you don't get to see all of the previous chat. Is the IRS Fresh Start program legit?
So, the Fresh Start program. So there's a bunch of delinquent filing programs that are available, and a lot of them are legitimate. Just make sure that you're working with somebody that knows what they're doing. I haven't used Fresh Start for any of my taxpayers because most of them are they have delinquent FBAR issues. People come to me because they have delinquent FBAR issues or they were overseas and they've got foreign earned income exclusion. So we have to use one of the streamlined filing procedures. But as long as you're going to somebody that has experience in this area, I recommend using someone that has some sort of designation, whether it be a tax attorney, an enrolled agent, a CPA, or someone who's the IRS has another program. It's like there's like national tax provider, and it's like a tax refresher course. People, I can't remember their names. I'm sorry. I apologize if anybody's listening to that. But anybody who has some sort of designation behind their name, just because are held to a different standard than people that are not. We have continuing education requirements. If if you file a tax return and you lie on your tax return, you get a slap on your wrist. I get 3 to 5 years in federal prison. So there's much more incentive for them to be compliant and to do things the right way. I could get penalized. My license could get suspended. Um, anything. I have a colleague, you know, she ended up getting a couple DUIs and they took her license away. So, I mean, it's things like that. You have to meet a different standard than someone who is just doing tax returns, you know, and they don't
By
have
the
a
by the milk and the ice cream.
the eggs, the milk and the eggs.
That's right.
So cold back there. It was terrible.
Oh my gosh. So here it is. Holly, she says she can't wait to get her babies out. There you go. Hey, Rui. Yeah, this
Hey,
Rui,
Rui.
this is a very American centric show
Yeah.
tonight because we're talking about taxes for expats. I know. Yeah, that's right. Oh God, taxes, right?
It's
You
like,
don't
wait,
want to be here unless you just want to practice your English.
yeah. Goodness.
Kudos and big thanks to Katrina. You are very welcome, Stella, Halisi, and Rick, for this very scary and informative. For
Very,
you,
very
yes,
welcome.
ignorance is not bliss, and it can be very expensive. And we're not doing all of this to teach you guys about financial independence, financial freedom, just to have you get into a situation where a good chunk of the money that you have so carefully set aside gets taken by um, Uncle Sam and them,
Right.
right? Because you didn't know, but somebody is paying something. Yeah, somebody is paying something. All right. I think we have almost done it. Have we? I see this one. Okay. My piece. Married but separating as you prepare to move to Portugal. Continue to hear about establishing residency in another state, thinking Florida from New York. What are my filing options next year? Married, single, etc.
It's going to depend on what your status is December 31st. Also, or if you're legally separated, depending on how long you're legally separated, sometimes you can file a single or a head of household. Um, but the IRS has a publication if you're interested. Publication 17, and that question is more of a domestic tax issue. Publication 17 gives you the entire tax, just general IRS tax for individuals. I When I used to teach individual income tax preparation, that was my textbook. Like, here, this is what we're going through. The IRS also publication for expats, it's either 54 or 514. But it talks about a lot of what I talked about today. Um, and it gives you a lot more information and examples. It's publication 54.
Okay.
Yeah. So IRS publication 54 is the tax guide for US citizens and resident aliens abroad. And that will provide you with, if you like to kind of research things on your own, then that'll give you a lot of information about the foreign earned income exclusion, the foreign tax credit, and things like that.
And I just put that in the chat, what she just said.
Yeah.
Is there a step up basis on a living estate on a home I own with my mom?
Potentially, yes. It's going to depend on when you became a partial owner with her, but that's more of an estate tax question. I'm not going to answer today
Okay.
because I need more information. So it's possible.
Brenda's asked, do I need to move from my home state of Georgia before I move to Portugal? I think you mean sell everything
Mhm.
here and go, not jump around.
So if you don't, because Georgia is a domicile state, sorry, Georgia could continue to tax you even after you're gone, and potentially tax your estate as well if something happens to you when you pass away. And just to be clear about this isn't something that is I'm talking about in theory. I've seen this happen before. So if you're a green card holder, and we're talking to citizens mostly, but let's say you're a green card holder. If your green card expires, it expires by operation of law, meaning you can't use it to use the US. It doesn't expire. I have had clients, estates of clients, where they have passed away, they left at 18, 19 years old, and the US taxed their estate because they didn't surrender their green card back to the USCIS. I've had that happen multiple times. So this isn't something that just happens in theory, like, oh, they might tax my estate. They're gonna tax your estate if they get their hands on it, especially if you've got anything in a US bank, that 401k, those IRAs, though, they are gonna snatch it and hold it. I have had foreign nationals that worked in Georgia-based companies that passed away. They left and their foreign spouses couldn't access those funds. and we had to file a foreign estate tax non-resident alien account
Wow. Wow.
tax return, get that confirmed, basically get a letter, a transfer certificate saying this person doesn't owe any more taxes. This deceased doesn't owe any taxes in the United States, and we can release it not to their spouse, but to their to the executor of their estate in another country. I've had to do that multiple times, and that can take up to 18 months just for them to get access to the money in the U.S. bank. So this
Oh
happened.
my gosh.
Yeah.
Oh my gosh.
Yeah.
So, I mean, it's up to you if you want to, because, if you want to not have to pay state taxes and things like that, if it's going to be cumbersome for you, then maybe it's worth it,
Yeah.
as far as Georgia goes. Okay, this is the last question, y'all. My father opened a bank account for me in Jamaica. I closed the account and transferred some of the money to my parents and some to my U.S. account. Should I have reported this on this year's tax return?
On the FBAR, if it was over 10,000, then yeah. But you've got until October 15th to do that.
October 15th. So let's talk about, in this last 5 minutes, grace for Black business owners.
So we had this conversation earlier, me, Rick, and Halisi, because I was telling them a story about when promoting this, I had a negative comment from a participant, and I was just saying, during COVID, I was struggling really, really hard. I was building my business. I had, children at home that were homeschooled and virtual schooled, and just some things going on in my personal life as well. And I said, admittedly, my clients did not get the best of me during that season. I was dealing with a lot that I was, I started my business in 2015, but I started it as a full-time employee. So it's very, very different when you have what they call the golden handcuff of a six-figure job, and you've got a business that's doing well, but it's still a side hustle, to cutting that handcuff and going full-time, which is what I did in 2019, and then we went into COVID in 2020. So it's just interesting to me that, and I'm always good. It doesn't matter. We're in 2023 now. So that was 2020, 2021. We're in 2023. I've made substantial changes in my business and business model, but every now and then I still hear, from things that happened before. And it's just interesting because I think any business owner, it sounds like there's a lot of people on here that are business owners, you're going to have to pivot. You may go in and start a business and say, you know what, I'm going to do this. And then you're like, no, I don't want to do this. Or no, I don't like doing this. I thought I was going to doing this. And, there's a saying that says success is how high you bounce after you hit the bottom. And I think that we tend to give grace unless it's it's a Black business owner. It's like, oh, that's a Black business. This is exactly why I don't support. And it's like, okay, well, if we were dealing with a non-Black business, would you have that same? Would you give them some grace? So just an interesting.
And yeah, it is, because we talked about detoxing from the U.S. and we talked about internal oppression.
Mhm.
And one of the signs of internal oppression is not supporting the community and not showing the community grace. And I see that looks like Vicky gave us a
Thank you,
super
Vicky.
chat
Super chat.
Yes, super sticker for 10. Thank you so much. That does go to our scholarship fund. And you can still get into Beyond the Bling before we change the model. So that information is below. We don't have any scholarships available yet, we're still adding it up. But we've already given away 3 scholarships, so that's great. But when we're talking about internal oppression, one of the things is not supporting each other. Not supporting each other. And you've heard it, y'all. That's why I don't do business with Black folks, because they always but da 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 da. But you're still going to Walmart and you're still going to Target. And even though they got all the Black hair care products locked up and ain't nobody else's stuff locked up, right? You still going to Whole Foods and getting overcharged. And we keep doing that as if we have to.
Right.
And we don't. We don't have to keep supporting those other businesses, but unless our businesses are 100% perfect, then we've got something to say. And so I wanted to bring this up because this is one of the things that we do not want to carry with us. This is one of the things that we need to be aware of. And we need to ask ourselves, why is it that we don't show each other grace, and that we set our community's businesses to a higher standard than we do businesses owned by the majority in the United States. So we're going to leave it with that, because this is our Black Utopia.
Yes.
And we are going to support and love each other anywhere in the world, no matter where we come from. We're going to treat each other with love and grace. And so with that, Katrina, thank you so much. My head is spinning, and I'm probably going to call the Portuguese accountant again. I've already taken notes on things I need to tell my accountant in the States, who worked for the IRS for 25 years before she broke that golden handcuff. Yeah. So I know she knows what she's doing. But just in case.
Well, and think about the IRS too. The IRS is huge. So where was she during the IRS? Exactly.
What department?
Because I call the IRS sometimes, and they have a special international tax number, but then they also have a taxpayer, like there's a tax practitioner line. So if I need something specific for an international issue, then I'm going to call them, even though I'm calling the tax practitioner priority line. You may not know what I'm talking about. It just depends on who I get, because you may not have seen it. Same thing. There are some things that I know just off the top of my head because I deal with it all the time. Another tax practitioner may see something that I've never seen before. And, we both have specialized knowledge. It's just in two different areas. So.
Right. Exactly. So I'm definitely going to hit her up. Y'all, you've heard all of this. I'm sure you still have questions. Tell your tax person to get in contact with Katrina. That information is in the chat. It is also down in the description below. If you're watching the replay, hey, if you want to move abroad, we have a Move Abroad Toolkit. That is below. If you're trying to figure out how you can do this thing, how you can retire on time, we have a Ready to Retire Toolkit. That is in the information below. And then lastly, if you are going to be here this Wednesday, we've got this huge meetup coming up. And I know there's already some people who are here in Lisbon to do scouting trips and are going to be at the meetup. We're going to be dancing. We're going to be partying. We're going to be learning about the African presence here in Portugal. We have another meetup coming in June, on June 20th. And then on June 19th is the boat excursion. So if you're going to be here in June, you definitely want to sign up for that. The email list so that you can know about that is in the description below.
We want to meet you.
Yes.
We look forward to meeting you.
Yes. And so next week, we are going to be talking to someone who is an expert in expat careers. So if you don't yet have the money saved, if you are not yet in a position to retire and you need to still work, but you're ready to get out of Dodge, you want to tune in next week, because this may be a faster path for you to get out. And then once you are paying less to live, you can save more money so you can stop working. Right? I know that's right. All right, y'all. We will see you on Thursday as we talk about hostels in the most expensive countries for grown folk.
We see some crazy hostels.
Yes, so we're talking about Singapore and Switzerland and places like that where it's so expensive to stay. We've actually seen some nice places too. Yeah. So tune in for that. And otherwise, we will see you. Bye.